Welcome to our weekly Forex forecast, and today we're looking at the week of April 27th to May 1st, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we'll start off by taking a look at our calendar here. All right, starting the week off here, we have Bank of Japan coming up. So at this point, not really expecting more of a drop in interest rate. They're already negative here. And lately, Bank of Japan has talked about more stimulus. So at this point, that should be priced in. But if there are any surprises in regards to the stimulus, then we could see a change in Japanese yen. So right now, or last week here, yen has been strong. So if they do too much, or if they provide too much stimulus, that may be negative for Japanese yen, but it will be positive for Nikkei. So just keep that in mind. So it will all be about the commentary out of Bank of Japan. And then we also have a press conference from Bank of Japan that usually happens earlier into the London session generally. And then we have consumer confidence numbers on Tuesday from US here. And at this point, they're supposed to expect it to drop here, which is a given considering what's going on right now around the world here. Now, the question will be, will the numbers actually meet what the expectations are here? So last week, it was a mix of data. Some of the numbers coming out of the US were higher than expected, and we did see stock market go up as a result of that. And US dollar has done relatively well overall. So this week here, with more data coming in, if these consumer numbers are positive, this is likely to be better for the US dollar and also for the stock market in the US, so Wall Street. So keep that in mind here. Australian dollar here, we have CPI, quarterly CPI numbers here, inflation numbers, which is one of the key numbers that the central banks track coming out here. So for the data out of out of Australia, even though some data has been negative, it hasn't really had much of a negative impact on the market or on Australian dollar, just because the stock market did relatively well. So there was more of a risk-on environment here in last week. So as a result of that, the negative numbers have not been bad for Australian dollar, but that can change. So as the risk sentiment changes, we could see these negative numbers or below expected numbers have more of a negative impact. So that is something we'll watch here this week. Coming up on Wednesday here, GDP numbers here out of the US at this point, looking for a big drop here. And the same thing applies. If the drop is worse than expected, that will be negative for the US. But some of the numbers that have come out of the US have been positive, or they have come in above what the expectations are. So they may have dropped, but they were still better than expected. And that tends to be better for the currency when we see that happen. Now, this is also our FOMC week at this point, as we are pretty much every central bank right now is fairly low in terms of interest rates, so not really expecting an interest rate cut. At this point, central bank or Fed is doing a lot of stimulus in the economy. So if they talk about increasing the stimulus, we saw recently that US passed another approximately 500 I want to say $500 billion in terms of the stimulus bill. It was 484, I believe, so close to 500. Now, that is a lot of money that's being injected into the economy. So if they continue to announce further stimulus programs, that will be negative for the US dollar, because pumping too much money into the economy or printing too much money is not a good thing for the currency. It's great for stock markets, but not necessarily for the currency. So we could see US dollar drop if the Fed comes in too heavy with too much stimulus, or they keep increasing it. So keep that in mind. And then we have PMI numbers out of China here. So the PMI numbers are supposed to drop here, but not very much. And now China is starting to go through the second wave here for coronavirus, but these numbers are previous numbers. So we'll see how they stand. So if the number is fairly close to 51 or even better, then that would be good for Australian dollar, New Zealand dollar, the stock markets. So overall, we are likely to see markets go up, but the dollar crosses will drop as a result of that, should that happen. Now, if the numbers are worse than what we are expecting here, or what the economists are expecting here, then that would be negative for Australian dollars, Australian dollar, New Zealand dollar, as well as the stock market, because that will show that the impact of the virus has been worse than what was expected. So we didn't get the full details of what was going on in China at this point or previously. So this is an important number to keep an eye on. And then we also have business confidence numbers for New Zealand. As we can see, the numbers were, where did it go? Sorry. The numbers were quite negative here. And if this number drops further, that will be negative for New Zealand dollar. So with New Zealand here, New Zealand has been in a complete pretty much lockdown, and they have done relatively well in regards to the coronavirus because of the strong measures that they have taken. The downside of that, though, is the impact on the business activity, which is devastating in terms of economics. But so if we see a worse number here, that will be negative for New Zealand dollar. So keep that in mind. We may get a tug of war between risk on and then bad numbers. So we'll see how that plays out. But definitely anytime we have business confidence or consumer confidence numbers dropping, that tends to be negative for the currency. And then we also have consumer confidence numbers here for Japan, and same thing applies. They're supposed to get better, so we'll see. If they do get better, that will be good for Japanese yen. And then coming up on Thursday here, we have another central bank here. So 3 central banks this week. We have ECB as well. ECB is already at 0, so not expecting a negative interest rate. The question here will be the stimulus from the Eurozone here. So there have been a lot of negotiations in Eurozone in regards to how they're going to implement the stimulus package. Right now, they haven't really reached an agreement. So if they announce that, then that can be negative for euro, just because, again, printing money is never a good thing. So we could see euro drop as a result. Or if we see that those negotiations are not going well, that can also be negative for the Eurozone, because the different economies, they do need help from the government and the central bank. So if that's not happening, it will have more of a negative impact than what we will see in other economies that have already implemented these programs. And last of all, it will all be around the commentary that we see from the from ECB here. If ECB is willing to support the market, like we have heard from all the other central banks, then that would be good for the stock market. And then coming up here, we have Canadian GDP numbers. Canadian dollar has taken a hit as a result of oil, but then in the last little bit, we have seen oil go up, and as a result, Canadian dollar has recovered a bit. Coming up this week, though, if oil resumes its downtrend, then we are likely to see negative, or that will be negative for Canadian dollar. And on top of that, if the GDP numbers come in below expectations here, that would be bad for Canadian dollar. With everything that's going on with the virus, oil prices, and then GDP numbers dropping, that will definitely be negative for Canadian dollar. So watch out for that. And then of course we have unemployment claims here. Last number was just over 4 million here. Now we are expecting a bit of a drop in there because a lot of people would have already applied for the employment or unemployment employment insurance, whatever you want to call it. But the numbers are still likely to increase because the rollouts, basically, a lot of people are losing their jobs. So if this number is higher than what it's expected here, that means we are still seeing a lot of negative impact on the economy. So it will be bad for the US dollar. And Chicago PMI numbers here, expecting a big drop here. And that's to be expected because with all the businesses, or a lot of the businesses closed, purchase managers are not going to be buying a lot of stuff, especially when we are looking at a recession in the upcoming months. But again, if the number is worse than this, that means there's a higher concern or higher level of concern. That would be, again, bad for US dollar. And then into the weekend here, we have number of holidays here. So the expect lower liquidity conditions on a Friday here. We do have PMI numbers out of UK here. Same thing. It's supposed to be in line with the previous numbers, but if the drop is bigger than what the expectation is here, that would be negative for British pound. So British pound did okay last week. It did drop and then it pulled back. So we'll have to see if that drop continues this week, and or the data that's below expectations will support that drop. So we'll keep that in mind here. And then of course we have PMI numbers for the US as well. Last time they came in slightly better than expected, the numbers that came in last week. And as a result of that, we did see a jump in the stock market. So if we see these numbers if these numbers come in line with expectations or better than expectations, even though they may drop from the previous number, again, we can see a jump in the stock market, which means the risk, the safe haven currencies will actually drop. So that's what we have coming up here. So let's go on to our chart here. All right, as usual, we'll start off with euro dollar here. So we did see last week we were expecting euro to dollar to drop. We did see that drop. Price came right into this support level at 1.0725 area. And then since then, it has bounced from there. And this is what we have. So we see a bit of a reversal here. Price rejected the low level here. So now we could see price go up even higher here. So do keep an eye. What I'm looking for is a potential retest of this 1.0780 level. And then if it holds above, we could see it go back towards the top of this range. So this is where price has been trading for last 3-4 weeks here. And if it manages to hold above 107.80, chances are it will go towards the top and then may come back down. So for now, my bias here is neutral. So I'm not quite bullish on it yet, but if it holds above this 1.0780, then there may be a buying opportunity. So neutral bias for euro dollar for this week. Pound dollar here, this one, as we can see, last week we were looking for a drop. We got that. And right now we do have a bearish candle close. So for this one, bias is bearish here. Now look out for that pullback into 1.2400. And then if it holds below, I will look for price to go back down to retest the low at 1.2250. And then this will be the decision point. If it holds above, then we could see it go back up again. And this one has also been trading in this range, as we can see for the last several weeks here. Price has been stuck in this range here. It did try to go through last week, rejected it, and we are back here again. So bias here is bearish with caution though, and I would keep an eye on these numbers that we just talked about. Aussie dollar here, weekly looks bullish. We have a bullish pin bar. Last week was neutral. We saw that price went and tested the low here, and now we have a bullish pin bar here. So price rejected the low twice, and this means that we're likely to see a move back towards 0.6450. So bias here is bullish, but now keep in mind we are coming into very strong resistance level here. This is where price struggled on the way down before it broke through, and now it's struggling on the way up. So if it doesn't get through 0.6450, it can come back down. So that's something to keep in mind. Right now, though, it does look bullish. First target is 0.6450. And should it get through that, then we have more room here. And next target is 0.6580. And then above that, we are looking at 0.6660. So bullish bias here for Aussie dollar. Just keep in mind this level at 0.6450 because price could turn there and we could see it come back. But bullish bias for now. New Zealand dollar here, this one has not been as strong as as we saw for Australian dollar, but it has rejected the support level nonetheless. So as we can see here, price did go down all the way into the support level, similar to what we saw for Aussie, and then it has come back up again. And now the candle that we have here is a neutral candle. So at this point, bias is neutral. What I'm looking for is a retest of the high here at 0.6100, and then if it holds below, we can see it go back and become a range bound again. So right now it has been trading in this narrow range, and over the last few weeks here it has been trading in a bit of a wider range here. So for the last 4 weeks, price has been stuck in this range. So that's why bias is neutral. And I will look for a retest of the high again into 0.6100. And if it holds below that, I will look for a move back into the range. So right now, bias is neutral here for New Zealand dollar. Dollar CAD here, as we can see, this one has also been stuck in a bit of a range here for the last few weeks. We see that price went high or into the top of the range here. Now, with oil dropping as it did last week, we have seen price go up, but there is a big rejection on top. So with this one here, we could see a retest higher. Now, this move is likely to be dependent on oil price as well. So if oil does well, then I am looking for a drop back towards the support here. On the other hand, though, if oil runs into problems again, then we could see this one go back up even into the top of the range. So watch out for that. But for now, I will look for a bit of a pullback potentially into 1.4180. And then if it holds below, I'm looking for a move back towards the support level here again at 1.3880. So for now, bias is neutral for this. Greg, you're talking about bullish flag on dollar CAD. Yeah, it is holding up here, and as long as it holds above here, then we could see price go back, especially if it goes through the high here. We are likely to see it go back up. So the way the bullish flag works is something like this. We have a bullish move, and then price holds in this range, and if it breaks to the upside through the resistance here, then we're likely to see it go higher. Right now, though, it's not quite ready yet. It's holding, and if it manages to hold above this 1.3880 level here, but it has to break out first. So right now, I'm not looking for a breakout just yet, but at this point, I'm just looking for a range-bound move, and we'll take a look at the support level here. What happens if it holds above? Still, then we are still range-bound until it breaks out. And for that to happen, US dollar would have to stay strong. So we'll keep an eye on US dollar, and we'll see how everything goes with that. For now, bias is neutral for dollar CAD. Euro pound here, this one, as we can see, price came into the top of the range, rejected that, and now we are back here again, big, large pin on top. So we could see a price drop again, but this is neutral still. We haven't seen a break through the support here. So unless that happens, this one is range bound as well. So this one's kind of opposite of what we saw with dollar CAD. Dollar CAD is holding the high, Euro pound is holding the lows here. So with this one here, we could see a continuation to the downside. So this one could turn into a bearish flag as well. But for that, we would have to see a break through the support for a continuation to the downside. This one's not quite ready yet either. Right now, basically, I would look for a retest of the support here, and if it holds above, I would look for a move back towards the top of the range. So right now, this is looking neutral, but if it drops through this support level, then of course this entire inefficient move can get filled, and then that would mean a continuation of this bearish flag as well. For now though, like I said, bias is neutral. I'm looking for a retest of the low, and then if it holds above, for a move back into the range. So for now, bias is neutral here for Euro pound, and the target level here is 0.8680. Euro Swiss franc here, this one finally broke through the support level here, as we talked about last week, but it hasn't done or actually it broke down the week before, but it hasn't really done much last week. It has pulled back. Now it's holding below the support level here at 1.0435. So if it continues to hold below, I will look for a further move to the downside. Overall though, still looking for, or we are still in this downward trend. So bias is bearish here. But as we have to see it hold below 1.05, actually 50, which is the base of this pin here. And if it does, I will look for a further move to the downside. Not my favorite pair to trade right now because it has hardly moved. In the entire week, it has moved maybe 50 pips. Let's take a look here. So this is the entire move for the week here. It's been stuck. Not a whole lot going on. So like I said, it hasn't even moved 50 pips in the entire week. So not the best one to trade. There's really no movement here. So right now, bias still remains to the downside for this. And next target here, the first target would be 1.0500 and then 1.0480. Pound Swiss franc here, this one dropped nicely, went into support level, and it has gone up since then. So right now this one's neutral as well. There's a large pin, which suggests that we could see a move higher. So I will look for a potential move into 1.2140 or even into the high of these candles, and then I will look for a move back down, basically looking for a range-bound move at the moment. Now, should it go through the high though, then there is, of course, room to the upside. So let's put some levels here. So right now, bias is neutral. First target is 1.2140, and only if it goes through this level would I look for 1.2270. So neutral bias at the moment, but do watch out for a move higher. Sorry, which lines are you talking about? Somebody asked the question, are those pivot point lines these ones? Yes, they are. They are pivot point lines. The lines on my daily, I should say daily or weekly chart, those are support resistance lines. But on the hourly charts, the one that you see, so these are support resistance lines. The previous ones were pivot point lines. So these are support resistance lines. All right, dollar Swiss franc here. This one as well, as we can see, has kind of been stuck in a range here. Now, it did try to break down through the support level of the range, came back in. Now, it went all the way to the high here. The candle isn't the strongest candle. It does have a bullishness in it. So neutral bias, because the bullishness is kind of outdone by the big wick that we have on top. So bias is neutral here. Now we could see, look for a move back into the high. And if it holds below 0.9800, I'm looking for a drop. And this is the move essentially that I'm looking for. So this one is also looking neutral at this point. So the levels that I would keep an eye on would be 0.9800 on the top and then 0.9650 in the bottom. So neutral bias here as well. Pound yen here. This one on the daily hasn't really done much. So let's take a look. We did see that initial drop here, and then it kind of got stuck there in the sideways move. Now, based on the candle close here, this is looking bearish. So bias is bearish. I would watch out for a pullback into 133.50 and then a further drop here. First target is 132. And then below that, we're looking at 131.20. So bearish bias here for pound yen. And we could even see it go into 130.50 into the base of this candle here. So bias is bearish for pound yen. Euro yen here, this one finally broke through the support level here from last week, moved nicely into the next level, but now as we can see, it has bounced off of that level. So if you take a look at the daily here, you'll see price came right into the support level and then has bounced off of that level. So from the daily perspective, looks like we could see a further move to the upside. First level to watch out for would be 116.65. But if we go back to the weekly here, we see there is still some bearishness in it. So I'm looking for a pullback essentially. So 116.65 or even all the way into 117. And then if it holds below that, then I would look for a further move to the downside. But this 117 level is very, very important, because if it breaches this level, then we could see it go back into the highs of these candles here. So right now, my bias for Euro Yen is neutral here, because we have bearishness, but then again, there's rejection in this candle as well. So neutral bias here, like I said, I would look for a pullback potentially into 117.00, and if it holds below, then looking for a retest of this 115.50 and potentially lower. So Euro Yen looking neutral. A dollar yen here, this one we see a pin here. So bias is bearish here. Do keep in mind, price is right into the support level and it hasn't managed to break this level yet. And for this one as well, if you take a look at the daily chart, we see that price has just been going sideways here. So it has to break the support for it to continue lower. So if it doesn't, we could see a reversal. So for now, bias is bearish though, but keep in mind the support level. If it doesn't break the support level, this one could go back up towards 108.65. For now though, bearish bias, and next target is 107, and only if it goes through that would I look for 106.50. So this one has been sideways for a bit, so we just have to be careful. So bearish bias and targets 107 and then 106.50. Aussie yen here, this one is looking bullish. We see that price has rejected the support level twice here. It did try to go below, but it got stuck into this support level. So 2 pins in the bottom, this looks bullish here. Now, first target is 69.50, and only if it goes through that would I look for next target here, which is 70.60. And then it could go potentially higher even into 71.50. So bias is bullish. Now the caution here would be our resistance level right here. This is a strong resistance level. So if price is not able to make through it, then chances are it will go back into the range, back towards the support level, because this is where it's been stuck for the last 2 weeks. So in this case, very important to keep in mind our resistance level here. So I would look for a potential pullback, and then if it holds below, back into the range here. But for now, the rejection shows that this is looking bullish. So chances of this moving higher are pretty good. So bullish bias for Aussie yen. Now with all the yen crosses, one thing that we have to keep in mind would be the stock market. So the sentiment in the stock market will play a big role, because if we go into a risk on environment, so which means that investors are willing to take risk, under those circumstances stock markets will go up, and safe haven currencies like Japanese yen and US dollar will drop, which means the yen crosses and yen crosses as well as dollar crosses are likely to go higher. So very important for us right now to keep an eye on the stock markets, because our dollar crosses and yen crosses will move in the same direction as the stock market will. So stock market did well last week, and that's why our Australian dollar and New Zealand dollar crosses did well as well. Next one, New Zealand yen here. This one, as we can see, still trading in this range here for last several weeks. This week's candle close is completely neutral at this point. So right now I'm expecting this to still be stuck in a range. And the range that we're looking at is this here. So 66.20 all the way into 63.25. So right now, bias for New Zealand yen is neutral. CAD yen here. This one has also overall just traded in this range here. It has tried to go into the support level, bounced off of this level. So this one is neutral as well. With this here, I will look for a potential move back into 97 level. And then if it holds below that, then I am looking for a move back down towards the support. And we may see this trade in the lower part of the range. Now, should it go through the resistance level at 77, then we're looking at 77.80 and potentially even higher. So for now, bias is neutral, looking for it to hold within this range, and we'll see how price reacts at 77. And depending on which side it closes on, we will adjust accordingly. So right now, bias is neutral for CAD yen. All right, so let's take a look at our commodities now. We'll start off with silver here. So silver, as we can see, went all the way into the bottom. Here into the support, and then it got rejected. So at this point, large wick to the bottom here, we could see it go back up. So I would look for a move back into 15.50, and then depending on if it holds below that level, we could see it come back down towards 1450 and become range bound here. So right now, slight bullishness for silver, looking for a move towards 1550, but if it holds below, then I'm looking for a drop. So slightly bullish to neutral bias here for silver. Gold here. Gold has done relatively well last week. As we can see, it's still holding towards the high here. And from the daily perspective, we did see it come back, and then it has pushed higher since then. So right now, this is looking bullish. What I'm looking for here would be a potential pullback into 1700 approximately. And then if it holds above, we're likely to see a further move higher. So bias is bullish. The concern here would be our resistance level into this 1750 level. If it doesn't go through the resistance level, then we are likely to see a move back down and potentially all the way into the support level as well. So watch out for that. Bias is bullish, but with caution. So once it goes through that 1750 level though, next targets that we have after that would be 1754 and then 1765, 5-ish level here. So bullish bias here for gold with caution though. Oil there. Oil has been all over the place. We did see that big spike to the downside with the with the fiasco we saw with the June contracts, so May contracts actually, sorry, the May contracts when it was expiring, the futures contract, when it was expiring, traders were just trying to dump their positions. So as a result of that, we actually saw negative prices for oil. And then as the June contract has rolled in now, we did see a continuation, then price has pulled back. So now we have a large wick in the bottom. So we could see a further move higher here. Bias is neutral here. We'll have to see if price holds below 21. If it holds below 21, then we could see this type of a move to the downside, and we could see price just hanging out basically sideways in this lower level here. Now, should it go through though, then we have more levels to the upside for it to become a range bound there. So right now though, neutral bias, we'll just have to keep an eye on this, and oil price will have an impact on Canadian dollar as well. So if you're trading Canadian dollar, oil is something you want to keep in mind here. So right now, neutral bias for oil. Copper here, copper did well, especially into Friday here. So we have a large pin in the bottom. So this is a big bullish pin bar here, which means this one is looking bullish here. So next target here is 2.36, and above that we have 2.44. So bias here is bullish. But do keep in mind, one, price is right into that resistance level. It hasn't exactly broken the resistance level. It's into it. And sometimes we can see price turn around in this type of situation, but we have a large inefficient move here. So this one can go back and fill the move, essentially go all the way back up here, because this is where the price move started from. So it's looking bullish. Just keep an eye on the resistance. If it doesn't get through, we could see that move back down. For now though, this is looking bullish. 2.36 is the first target, and 2.44 is the second target for copper. Bitcoin here, this one's also looking bullish. We see that price finally broke through the resistance level here, and this is where we stand. It is right into another level of resistance here. So of course we'll have to keep an eye on that. So the level to watch here would be at 77.30. So this is the resistance area where, as we can see, we had a nice solid candle, then price came back down here. So watch out for that. It is bullish, but for it to continue, we do need to see a break through 77.50. And if it manages to do that, then the next target here, the next target will be, so next target is 80.30 and then 82.70 back into the top of this candle here. Bitcoin is also filling this inefficient move, just like we saw for copper. So bias right now is bullish, but again with caution here as well. So Bitcoin here looking bullish as well. Okay, and then we have S&P 500. This is also, we see a large pin in the bottom. So if you take a look at the daily here, for the last 2 weeks, it's kind of been stuck in this range. And as we can see here, price went to test the bottom here and has pushed higher from there. So there's a rejection twice we saw for the last 2 weeks. Prices rejected the low, which means we could see a move higher with this one as well. Next target here is 28.80, and then we are into this resistance where price has struggled for the last 2 weeks again. So with this one, if it holds below 28.80, I will look for a move back down. Now, should it manage to break that, so this is where our if the risk sentiment continues, so we see investors willing to take on risk, then this one's likely to break through. And then we have 2,900 and potentially all the way into 2950 or even into 3000 level here. So bias for now is more to the upside here, so neutral to slightly bullish here. The test will be the resistance level here into 2880 level. So if it's able to break this, then there is so much room to the upside here. It could go all the way up over the weeks, over the upcoming weeks, I should say. For now though, keep an eye on 2880. If it holds below, I'm looking for it to come back down, potentially towards the support level. If it goes through this, then there's lots of room, but the resistance, this is a strong resistance at 2880 or 2900. And as long as it holds below, I will look for a retest to the downside. So neutral to a slightly bullish bias for S&P 500. Nasdaq here on the daily, we see that Friday closed quite strong. And on the weekly here, we see a similar pattern. Price went down into the support and we have a big doji here. So this one's also looking slightly bullish here. Next target is 89.80-ish level here, so 89.75. And same thing here, this is a strong resistance level. And if it price stays below this level, I will look for a move back down because, like I said, this is a strong resistance. But once it clears that resistance, we have a lot of room to the upside here. Next target would be 91.80, 92.20, and all the way into 9,300 approximately. So bullish bias here, but with caution. And the level that we want to keep an eye on here would be this resistance level at 89.80. If it holds below, then I'm looking for a drop. Should it go through, we are getting quite bullish then. And then we have Dow Jones here, which is looking similar as well. It's been trading in this range for the last couple of weeks here. So if you go to our weekly candle, we have a similar story here as well. We can see price has been stuck in this range. Twice price has rejected the low, which means we are likely to see a move higher here. So slightly bullish to neutral here as well. First target is the top of this pin here, and then we're looking for a move back into the high of the range, and 24,450 approximately will be the level to watch. If it holds below that, we could see it come back into the range here, and we could see another week of the sideways move here. So keep an eye on that. So right now, target is 24,450, but only if it goes through that would I look for the next one at 25,000. So neutral to slightly bullish for Dow Jones as well. DAX here, this one's done similar thing as well. As we can see, it has been stuck in this sideways move here. Same thing, price went into the support level, rejected it. Now we have a neutral candle. There's bearishness, but also a large wick in the bottom, which suggests that price could move higher. So this one's neutral as well. For this one, I will look for a move higher, potentially into the top of this candle, and then finally into this 10,800 level. And if it holds below, then we're looking for a drop. Otherwise, we could see it go into the next level here at 11,000. So for now, bias is neutral, but I'm going to keep this next resistance level here as well, because as soon as it goes through it, that one is fairly close by. So it's likely to for price to move back up there. So keep in mind the 10,800 level here. If it holds below, it's coming back. Otherwise, we are starting to go back into these this territory that price hasn't visited in a long time. FTSE here, this is looking similar as well. As we can see, price has traded in this range here for a few days now, so a couple of weeks for this one as well. With the sideways move here, it's still trading in this range. So overall bias is neutral at this point. Same thing here, price dropped, couldn't really go through it, and then we have a large pin in the bottom suggesting price is likely to move higher. First target is 59.20, and then we have 6,000 and all the way into 62.20. The top and the bottom of the range right now will be very important for all these equities markets, because if we see price go through the resistance, it's taking off to the upside. But right now, as long as it's in the range, it is going to stay neutral, and we are looking for move higher. And then if it doesn't go through, we're back again. So neutral to slightly bullish bias for FTSE as well. And last but not least here, we have Nikkei. This one is also going sideways. This is the range it's been trading in. Sideways move here. With this on the weekly here, we see a similar scenario. Price dropped, went right into this support level, bounced off of it. This one looks more neutral here with pins on both sides. Same thing here, price goes into the resistance, and if it holds below, looking for a move back down, and we may still stay range bound. But if all the other equity markets take off, this is likely to go higher as well. So I'm going to place the resistance right into, or the support resistance level here into 20,200, I should say, back into this level. But I will be keeping an eye on the top of the range and see how price reacts here. If it doesn't go through, I will look for a move back down. So neutral bias for Nikkei for now. All right, so that's all I have for today. So just a reminder, if anybody is looking to learn to trade Forex, this is a good time to do it. I'm offering my regular course, which is regularly priced at $497 for $197. It's a 60% discount just because of what we are going through at the moment. Once we are past this, we'll go back to our normal prices. So basically, you learn price action in this course, and the coupon code that you want to use for this will be "We Got This." So you'll get a $300 discount. So that's it for today. If you guys have any questions. There's a question, done with the Turning Pro Challenge? No, not quite done with it. I haven't really been posting updates. I should do that. The market kind of went nuts after I started, but I will post an update on that. So I'm still doing the Turning Pro Challenge. And actually, if somebody wants to, if anybody wants to join the Turning Pro Challenge, for that, the code is TurnPro. So you'll get a 30% discount to join the Turning Pro Challenge. So the code is just TurnPro, or the coupon code is TurnPro. For the Forex course, it's "We Got This." All right, so let's call it a wrap. You guys have a wonderful trading week, and I will see you again Monday then. Bye for now.